Good morning, traders. It is Monday, June 30th. Markets are trading higher again this morning. Not a whole lot has really changed from what we thought on Friday, how we expected the market to close positive at new highs, and then for that to carry over into today. There'll be a lot of people hoping today reverses who are short the market. They're going to hope that it's a fake out yesterday, Friday, the breakout in the S&P 500, hoping it's going to get rejected. If it doesn't, we're going to see continued those who refuse to get out of their shorts. Eventually, the markets will keep climbing higher and higher until they hit the breaking point, and we see a big wave of another wave of FOMO of shorts covering now that the S&P 500 is there. And we could see a squeeze, short squeeze, and a push and a pop higher. But again, we need to see how this market is going to react. We are long the markets, long-term, short-term, with the S&P 500, depending on the strategy that you're with. And we just let the market do what it's going to do. We had a really good question from a member in our live mentoring session last Thursday. He says, what do we want the markets to do? Are we bullish? Are we bearish? Do we want them to go higher? Do we want them to crash? And it's a good question. I'm going to try to clean up my messaging so I don't confuse people, because my opinion, my bias is bearish, as everybody I think knows. But the markets are going higher and we are long the market. So the key is we really want trends to just stay intact. We don't really care which direction they go so much. We want the stock market to go higher here. We want it to push higher because we are long the markets. We want to just try and benefit from all of that pricing to the upside. And eventually when it reverses and turns down, we're going to want it to fall and collapse. So that's, we want the market to move in the direction of our trades. Longer term, looking forward, and I know a lot of you feel the same way, we all kind of want a big market correction, a big financial reset. Not only can we avoid it, but we can profit from it. And then it gives us a new opportunity that could last 5 or 10 years to reinvest in all kinds of different asset classes, and including dividend stocks when they're finally undervalued or fair valued and they're paying big dividends. And we've got 5 or 10 years of upside potential. So right now, let's let the market keep unwinding, let the shorts get slaughtered, and we'll just keep riding it up and managing our positions to go higher. You can see here on the S&P 500, we avoided the crash. We got back in at 5% lower. We moved back up. We're deep in the money. We've hit a target with the S&P 500. We've hit a couple targets on our QQQ trade, up almost 13%. And we're just letting this market continue to work itself out. Our sentiment chart here on the left side here, the right side here, we've got deep red telling us there's huge distribution selling. We do not want to be involved in the markets, at least holding stocks during that phase. And now we're in this deep green, which is actually really hard to see, the deep green. But you can see deep green means money's moving in. People are very bullish. They're piling in. And we'll just let the market keep doing that going forward. Initially, we talked about this dead cat bounce. We actually called it and talked about it right here on this giant weak crash and close on a Friday, and this gap lower and washout. We called it on the Friday at the close. We should see the exhaustion move in the market, go into a dead cat bounce. It has gone into that bounce, and it has really kind of kicked over into a full-on rally. And you can see we go from a bounce to it kicked into a rally, and now it's continuing to go up, hitting new all-time highs. So more or less, that dead cat bounce is alive. It is not a bounce. It's a rally. And now the market is going to see if it's going to put in a massive double top. A double top doesn't mean it hits the same price and goes down. It just means it has to get close. And when you look at it from a monthly standpoint, it doesn't mean just a couple bars or a couple days. It could still be a month or 3 that pierce up to new all-time highs, only a little bit, and then reverse back down. And that'll still be a major double top. So don't think a double top is we've closed above it, now it's not a double top. It just is the general area. Trading usually isn't that specific unless you're really day trading down to the price. Long-term major market tops and bottoms are double tops and bottoms are the general area. It doesn't matter if they fail to make new highs or do make new highs. It's just the overall price area. So where else is money flowing today? We take a look at bonds. We do have bonds up 0.4%. Again, they're kind of drifting up. Short-term wise, they have kicked into an uptrend. They're above the 5, the 20-day, the 50-day. They're all sloping up. 150 days sloping down. So longer term, it's still stuck in a bearish or a stage 1 market. It is coming. It does have a series of lower highs, a series of lower lows. So not a huge fan of this. This could be seen as a big bear flag and could easily go back down to test these lows or go lower. So I've been seeing articles of people talking about bonds are on a run, longest upward streak in a few months, all this stuff, but don't get sucked into that. Is still not a very nice looking chart. It is dead money at this point. I know some people are picking it up, buying it, holding it for the long-term play, but just keep in mind, inflation is here to stay for a while. In fact, it might be going up based on current data. And if inflation goes up, the Fed might want to keep rates where they are for a long time, or potentially inch rates higher. We never know what the Fed's going to do, what anyone's going to do. So if that's the case, this long-term trend will be intact and bonds could keep going down. So just be very cautious trying to pick a bottom here in the bond market. We are seeing gold trade slightly higher, up to 0.25%. Again, it's in the sideways movement. If we just look at the overall pattern, it's very similar to this type of move. It's hit some pretty key levels. It's digesting that move, and overall, it's still bullish, and it's just kind of working itself out. Last week, we did see a pop of money piling into stocks. And of course, money has to come from somewhere to reinvest. So they pulled money out of gold, silver, miners in the last session, and they piled it into the stock market. And so that's where we're seeing that. So we could see gold, silver, and miners continue to consolidate as money flows into the ARK ETFs, the growth stocks, NVIDIA, all of that stuff. And eventually, when the stock market runs out of steam, I think that's when we'll start to see money coming out of the stock market back into gold, and we could see this go higher. If we take a look at the hot list, URA is still at the top of the list. Now, we did trade this. We got in. We played a very nice move to the upside, hit all of our targets. We've moved aside. We are still long. Where is it on here? I don't see IBIT on here. We are long IBIT. I don't know why, unless I totally just missed it. But we are long, IBIT down at the bottom here. It does have this bull flag pattern. It is primed and ready for a pop. This is actually a nice little bull flag. This is a high momentum move. We could easily see Bitcoin, just based on this really tight little pattern, have a really nice move to new all-time highs. That could actually happen within like 3 or 4 days. That just based on, took 3 days to move up, 2 days down, 3 days to hit that same target. So we're not too far away from, if Bitcoin pops and rallies, it's probably going to be the stock market also having that rally, that move up. If the NASDAQ moves, we should see Bitcoin move. It doesn't always go like that, but in general, it does. But we have been seeing Bitcoin move up nicely. We hit a target. We're still up 10% on it, and now we're just letting it work itself out to continue to go even higher. If we take a look at the ARK ETFs, we do have the ARK and the blockchain, semiconductors, all that stuff near the highs. You can see they've all had a pretty nice run. They continue to be top performers. So money's piling into the ARK ETFs, the growth stocks. And let's actually go take a look over at the Russell 2000 real quick. Russell 2000, also known as growth stocks, they're far from their highs. In fact, they don't have a very bullish chart pattern at all, in my opinion. Let's just full screen this a bit. If we look at this pattern, I'm not a huge fan. I would say this is like top. It looks like two massive double tops. And we've definitely broke down through this level. It crashed, and now it's coming up, and it's kind of hitting its head on this kind of breakdown area. So while it still could push up higher, it definitely has some pretty significant distance to go percentage-wise. It has some significant highs to break through. And the small caps usually kind of lead the way. Percentage-wise, they've had a very nice move. But the fact that they're not breaking to all-time highs, and really NVIDIA is doing a lot of lifting, is a bit of a warning sign, obviously, here. NVIDIA pushing to new highs. NVIDIA could be the one that kind of bucks the trend. I know it has a lot of market weighting, but it could continue to have some growth for a while. I mean, it really has come out with some tech that has blown my mind. And it is pretty wild how it can really run the whole internet through one board, equivalent of bandwidth, which absolutely blows my mind. Sounds pretty efficient, too. If that's the case, then maybe we don't need as much electricity as we think to power AI if everybody just moves to these little 4-foot boards that can handle all kinds of bandwidth and processing power. So that is definitely a game changer, I think, in the tech space of what they've built there. Other than that, I think that's about it. We'll leave it there and see how the market shakes out today. This is going to be a kind of a weird week. Tomorrow's a holiday in Canada. It's Canada Day. I think Thursday or Friday is off for the States. And So definitely going to be an interesting week. Not that when Canada closes down, it changes much in the U.S. markets. We are a tiny, tiny little group of traders and investors compared to the U.S. market. But generally, holidays push higher pricing. Usually big sellers have already done their rebalancing. They've sold what they wanted. They go on holidays, extended holidays through this time. And you need the big institutions generally to drive the markets down. That requires selling volume, and they've probably already done that. So usually light volume on holiday weeks, and the market wants to drift higher. Anyways, that's it for now. Talk to you soon. Bye-bye. So hopefully everybody had a good weekend. My son and I this morning, he came and joined me on the dock at about 6:30 this morning, and we hopped on the Sea-Doo, went for a little rip. He wanted to go out snorkeling to this ship that's kind of sunken out about 1.5 miles, 2 miles out, and we just had a nice peaceful morning. We're the only people on the bay. The water is like glass, and it was just so nice for him to wake up early and join me. Just him and I are connected at the hips. We just like adventures. Let's just go do something, and whatever it is. And anyways, hopefully everybody had a great weekend and has a good day.